Hey there, financial explorers, and welcome back to the channel where we demystify the market. Today, we're diving deep into a specific stock that's popped up on our hard-to-borrow screener, VRAX. We'll break down what makes VRAX an interesting case study for understanding short squeezes and high cost-to-borrow fees, even when it's flying under the radar. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show VRAX logo /ticker. Let's get straight to it. The stock we're analyzing today is VRAX, ticker symbol VRAX. This is a micro-cap company, and its sector is not readily categorized, which is common among smaller firms. Now looking at its recent price action, VRAX has been extremely quiet. Today's change, the last 5 days, and even the last 30 days all show 0.0% movement. Show chart highlights 0% changes. Similarly, the volume has been 0 shares today and the 30-day average volume is also 0. So, why are we talking about it? Because beneath this calm surface, the underlying metrics for short interest are screaming something significant. What is cost to borrow and why it matters? Before we get into VRAX's specifics, let's quickly explain cost to borrow, or CTB. Tax cost to borrow CTB. When a short seller wants to bet against a stock, they first have to borrow shares, sell them, and then hope to buy them back later at a lower price to return them, pocketing the difference. But borrowing shares isn't free. There's a fee, just like renting a car. This fee is the cost to borrow, typically expressed as an annualized percentage. When a stock becomes hard to borrow, it means there aren't many shares available to lend out. This scarcity drives the CTB fee sky high, sometimes exceeding 100% or even 1000% annually, like a high-demand luxury rental. A high CTB indicates strong demand from short sellers and a limited supply of shares to meet that demand. Why this stock is hard to borrow right now? Now, let's apply that to VRAX. Despite its current dormancy, VRAX has hit our hard-to-borrow screener with some truly eye-popping numbers. The annualized cost to borrow fee for VRAX is currently sitting at an astonishing 680.2%. Highlights CTB number. Even more striking, the CTB has seen incredible momentum, increasing by a massive 577 percentage points over just the last 5 trading days. This isn't a gradual increase, it's a sudden surge. Why? Because the supply of shares currently available to borrow is incredibly low, just 20,000 shares. When you consider VRAX's estimated float is around 0.8 million shares, those 20,000 borrowable shares represent a tiny fraction. This scarcity, combined with a high borrowing cost, gives VRAX a composite squeeze score of 51.7 on our internal 0-100 scale. So, while there's no activity right now, these metrics suggest an underlying pressure cooker. Squeeze mechanics explained. So, what does it mean for a stock like VRAX to have these conditions? It means the stage is potentially set for a short squeeze. Imagine those short sellers who borrowed VRAX shares to bet against it. They are now paying over 680% annually just to maintain a position. If VRAX were to suddenly see positive news or increased buying volume, even a small amount, those short sellers would face a difficult choice: keep paying the exorbitant fees and risk further price increases, or buy back the shares to cover their short positions. With only 20,000 shares available to borrow and a small 0.8 million share float, any significant buying pressure can quickly exhaust the supply, forcing short sellers to squeeze out of their positions by buying at higher and higher prices. This forced buying creates a feedback loop, rapidly driving the price up. Dilution risk check. One critical factor that can negate a short squeeze even with high CTB is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can provide short sellers with easy access to cover their positions, or simply dilute the ownership of existing shareholders, putting downward pressure on the stock price. For VRAX, our check found no recent dilutive SEC filings such as -1s, -3s, or 424BS within the last 90 days. Highlight no recent dilutive SEC filings. This is a positive sign for any potential squeeze thesis because it removes a common obstacle that could otherwise flood the market with new shares and alleviate the short pressure. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, given VRAX's current zero volume and zero price change, what should you watch for if you're tracking stocks with high CTB? The current hard-to-borrow status of VRAX, with its 680.2% CTB and tiny borrowable supply, tells us that if this stock were to suddenly catch investor interest or see significant news, the conditions for a rapid short squeeze are already in place. However, a high cost to borrow does not guarantee a squeeze. It can also mean that short sellers have very strong conviction that the stock will eventually fall, and they are willing to pay a premium to maintain that bet. For VRAX, you would look for any increase in trading volume, any price movement, and further decreases in the already scarce borrowable shares as potential indicators that the stock is waking up. VRAX presents a fascinating educational example of a microcap stock with extreme hard-to-borrow metrics even in a state of current inactivity. With its 680.2% cost to borrow, rapidly increasing CTB momentum, and extremely limited borrowable shares against a small float, VRAX's underlying short interest dynamics are definitely worth understanding. Remember, always do your own thorough research. If you found this breakdown helpful, please hit that like button, subscribe for more in-depth financial education, and let us know in the comments if there are other hard-to-borrow stocks you'd like us to analyze.